up every Bitcoin and markets. And oh my God, is it going crazy out there in the Bitcoin news cycle? Of course, Binance and Coinbase getting sued by the SEC. A ton happening. We're going to take a look at a bunch of these stories, try to form a narrative from an OG Bitcoiner. You're also hearing a lot of people out there fudding on Bitcoiners and saying that we're not supporting our brothers in crypto enough and all this. I'm going to try to debunk that. Look at a video from Bruce Fenton, longtime Bitcoiner. Look at a bunch of tweets. Watch a video of Gary Gensler, what he's saying. Look at some new evidence that just dropped against Binance. These are internal messages that were being sent within the company that are, devastating. I think they're devastating evidence. We're going to take a look at that and overall just form a broad narrative. 1 second. I'm going to share my screen. One second, guys. Like I said, guys, kids are off for the summer and their friends are coming in and out of the house. Oh my goodness. All right. So what you're seeing here is bitcoinandmarkets.com. Let me refresh this because I have put out another post since I opened this tab. Market Pro number 16 went out to the professional tier on the website. So if you guys want to get a bunch of extra content, couple dozen charts on this one, I deep dive into the Bitcoin charts, into the stock market charts, look at where I think we are going next. Check out bitcoinandmarkets.com. Also, if you become a member at bitcoinandmarkets.com, you get early access to all of my articles before they go out public. You get downloadables, and I wanted to show this downloadable that I looked at today for reference. This is a clickable PDF where you might have seen my prehistory infographic that Dan Held copied and he put out. I don't know if he put it in a book or something, but he did ask permission to do it, and I said, go ahead. So, but what I did was I made my own newer version that it's a clickable PDF. So each one of these things you can click and go right to the source of all of these things throughout Bitcoin history. Going all the way down through the cypherpunks, through the first forms of digital money, and then into like Napster, BitTorrent, decentralization, and of course the economics of all of this with Murray Rothbard and Hayek and all of these writers in the Austrian school. And finally, it ends with Satoshi Nakamoto. So I might extend this in the future to show things like Lightning Network and the scaling conflict and different important stuff in Bitcoin. But this is a free download. Click with clickable links if you sign up to become a member over on bitcoinandmarkets.com. And you also get the ability to be in our monthly forecast competition, price forecasting. So if you are a paid member, you can put in a entry forecast for the end of the month price, and the person that wins that gets $20 worth of sats at the end of the month. So check out bitcoinandmarkets.com and become a member. That supports everything I do. That makes this show possible. So I appreciate everybody who supports. Okay, let's take a look at the charts. And on this chart, I'm going to share with Telegram, actually. Oh, wrong room. All right, so that is the 50-day and the 200-day moving averages. You see that big bullish engulfing candle yesterday bounced off some lower levels, and kind of in line with what I was forecasting. I said any dip would reverse quite quickly because it takes a lot of Bitcoin to hold the price down. If the price is dropping Yes, the price is set by the marginal Satoshi, but you have to continue to offer Bitcoins at that lower level. I think as price goes down, people hodl right now even tighter, which restricts the supply, which pushes the price back up. And that was what I was expecting. And we did see a bullish engulfing candle yesterday. Today, it is red, selling off with more and more just repeated drops of bad news, which we'll go over here, but it really hasn't affected the price all that much. I mean, we're still sitting at 26,400. So the price has been very strong. When we do break out, this has been 82 days so far in this range. And when we break out, the longer we're here, the more potential energy is built up, coiling up. The move will be violent once we do break out of this range. Okay, let's move on to our first video. This is of Gary Gensler on CNBC, maybe yesterday or 2 days ago. Let's see, when was this? 1 day ago, yesterday. And he talks to this host, the multiple hosts, and they go over what these enforcement actions are all about. Let's jump in.
The SEC Chair Gary Gensler joined us this morning in a first on CNBC interview. Chair Gensler, it's great to have you back.
It's good to be with you, sir.
We've had you on several times, and we've tried to get from you a sense of timing when there would be more clarity regarding this space. It feels like now's that moment.
Look, I think there's been clarity for years. The investing public has the benefit of the U.S. securities laws. Crypto should be no different. And these platforms, these intermediaries need to come into compliance and protect the investing public.
That's what I've been saying forever and ever. There is clarity out there. We've known for a very long time that these are all securities. I wanted to bring up a blog post from Preston Byrne. And in Telegram, I posted it as a must read. But he goes through here. I don't agree with his conclusions in this article, but it is an extremely good article from an attorney in the space for a long time, going through the history of all this. And it was clear back in 2014 that there were legal risks of issuing securities on a crypto ledger like that. This was an article that something that he penned back in 2014. And his friend Tim Swanson, they wrote a Cointelegraph article. That's what it was. The title was Mitigating the Legal Risks of Issuing Securities on a Crypto Ledger. That was before the ICO hype. That was before the Ethereum launch. That was before all of this stuff. And right from the beginning, people in the know were saying that these were securities. This is nothing new. Gary Gensler is correct. And I'm not cheerleading the SEC, which we'll get into here in a second as well. Let's go.
Which of the cases we're talking about, do you want to take them one by one? Which is more important in your view?
You're leading this interview. I'm going to follow you where you are. But let me just say this to the investing public. These trading platforms, they call themselves exchanges, are commingling a number of functions, which in traditional finance, we don't see the New York Stock Exchange also operating a hedge fund, making markets, and as we alleged in Binance, having a sister org.
But guys, Dogecoin is different. Don't the regulators get it? Solana is different. ADA is different. Ripple, Litecoin, all these things are different, and they shouldn't fall under common sense application of the existing laws. No, of course, that's silly. Okay, all of these things are the same. The only thing that crypto has is it is a new breed of scam. It is a combination of a pyramid scheme, a Ponzi scheme, and an affinity scheme, because it's marketed to the Bitcoin industry. Okay, the Bitcoin industry is the large overarching umbrella, and these scams were sold to the Bitcoin industry through an affinity type scam, making it look like Bitcoin, calling it decentralized, concentrating on blockchain, right? All those things are the affinity aspect of this scam. So this is a new type of scam, but it's not a new type of asset. Okay. Bitcoin is a new digital commodity, but that's it. It's all of these other things are just scams. They don't need new regulation. New regulation is not a good thing, right? I mean, we should want to minimize regulation as much as possible, but Coinbase is asking for more regulation, and that's a point I'll bring up here when we listen to Bruce Fenton. But let's keep going on this.
Organization flooding the platform with transactions called wash trading, and the lack of controls on the platforms is really a web of deception and conflicts, along with a control person, Mr. Zhao, trying to evade U.S. law.
And given the timeline we're talking about, what do you say to viewers who wonder why enforcement has taken arguably at least several years, so long?
Look, it takes time. We do things by the book. That's what the American public would want us to do. We follow the facts and the law. And I couldn't be more proud of the investigative teams at the SEC working together with colleagues in our various divisions of trading and markets, our general counsel's office, 5 commissioners. But it's a lot of a gumshoe, walk in the beat investigation to build a case like what you've seen alleged in a 136-page complaint.
I also want to add to that yes, but the SEC, we shouldn't expect them to be proactive consumer protection. First off, they're not. I mean, their model towards consumer protection, which I have been very critical, and I remain very critical of the SEC. I don't think they really do a good job of consumer protection, but you have to understand their model here. I mean, Coinbase is complaining about regulation through enforcement. Well, what the hell do you think the Howey test is? That's how this whole thing got codified. I mean, yeah, you have the Securities Trading Act or whatever it's called of 1933, but the Howey test codified how to view things or how to define things as a security. And that's exactly what they're trying to do again here with Ripple and against Coinbase and against all these players. It takes a long time. And I've said that the way that the SEC enforces the hyper complex market out there is through the licensing of professionals mainly. So you have securities attorneys, you have banks that will launch IPOs. You know, you have this whole industry that's built around this with professionals, accountants, lawyers, all sorts of people. Just investors in general, you know, like wealth advisors and all those people. So you have all of these professionals that are licensed, and that they won't partake in stuff that is obviously an unregistered security for the most part. That's like their enforcement model. Okay. And that hasn't had the opportunity to build up with crypto, quote unquote, crypto and all these things. It does take a lot of time. So it does sound like I'm apologizing for these people, that I'm being an SEC apologist. I'm just trying to describe why it is the way it is. I'm not trying to say that that is the best model or that we should want this to be this way. But we have to understand this. And guess what? Coinbase understood this. Binance understood it. All of these big whale VC funds, they understood this. They were playing a game, $1 billion game, even $1 trillion game. How much was the market cap of DeFi and all of these scam tokens before they collapsed in 2022? $1 trillion? I don't know exactly how high it got. I mean, this is $1 trillion game. It's $1 trillion gamble that these whales won. And guess who got hurt was the investing public. So anyway, that's a tangent. Let's keep going.
Mr. Chairman, a lot of it is hard to understand. For instance, in
Yeah,
the
for you,
Binance
Kramer.
complaint, you say, Mr. Chairman, and I need to know this. The SEC's Binance complaint also seeks emergency relief, like an asset freeze, expedited discovery, and even the appointment of a receiver. Are there more pleadings coming? Because if you do this, that's the end of Binance.
Look, we have concerns, and I think the investing public should be aware of putting their hard-earned assets onto these platforms. But we have concerns when a platform like this puts themselves out to the public, is consciously trying to evade U.S. law and customer funds. You didn't even know who was custodying them. Was it custodied here in the U.S. on the U.S. platform? Was it overseas? Or were some of your funds in crypto possibly moved to affiliates? There are a number of affiliates named in this called Merit Peak and Sigma Chain. It's fundamentally a lack of controls, deception, conflicts. And yes, we're going to do that which we can in front of the courts and make, to the extent we can, the facts known and the public protected.
But when I read your Binance, I cannot understand how anyone can assign a value to crypto. It seems entirely predicated on the greater fool theory. Do you disagree?
Look, we as an agency are meant to be merit neutral, Jim. There's a lot of question. There's 10 to 20,000 tokens. Actually, in the Coinbase complaint, we note that they have, through the Coinbase wallet, you can trade 16,000 different tokens.
Geez, 16,000 tokens? Holy cow. I mean, it's obviously just a shitcoin casino, people. And we warned them for years. They knew exactly what they were doing. You know, I said on the Telegram that if you tell your kid, like, don't do that because, I don't know, they're doing something dangerous and they're going to fall and break their leg or something, and they do that dangerous thing and they fall, I'm not going to blame gravity. That's like blaming the SEC, okay? The SEC is there. That is the way this game is set up right now. And that's why Bitcoin is decentralized. That's why Satoshi made it decentralized. And we'll get into that a little bit later when we talk about Bruce Fenton. But look, we told them, and we're not cheering this on, but this is how it is.
And there's a lot of debate as to the use cases and whether there's any there. Look, we don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen. They're all digital right now. We already have digital investments. And you have entrepreneurs representing digital investments on this program all day long. And it's whether it's the big tech companies, the automobile companies, you name it. It's all digital right now, the investing world. So what is the real underlying value of these tokens? And that's why you need full, fair, and truthful disclosures. And that's the regime the securities laws was set up. When there's a group of entrepreneurs, those entrepreneurs should be able to put their case in front of the investing public in what's called a filing. That's kind of the bedrock of what President Roosevelt and Congress worked on 90 years ago.
Okay, now I want to add to this because this particular comment, when he's talking about, oh, we don't need more digital currencies because we have the dollar, we have the euro and all this. A lot of people were saying that was a shot at Bitcoin, but that was misinterpreted by most people. I don't think he did a very good job of explaining that. The way I would interpret that for my audience here is that he's trying to say that these things aren't innovative, that we don't need to worry about pushing innovation offshore because we already have digital tokens. We already have digital equities. and securities. We already have all of this stuff. So we're not going to be pushing this offshore because we already have it. So it's not a shot against Bitcoin at all. Okay, yeah, he didn't even mention Bitcoin in there. And he also knows he's a big fan of Satoshi, right? And Satoshi called it electronic cash. And that's akin to like physical commodity money. That's not akin to currency. I really don't even like the term, personally, I don't like the term cryptocurrency, because a currency is a denomination of money. So currency is the derivative and money is the thing. Bitcoin is the thing, currency is the derivative. And so I don't even like calling it cryptocurrency. It's a digital commodity that can be used as money. That's what it is. But okay, let's see. I think there's one more question here.
Chair Gensler's David, can you characterize at all what, if any, I would assume there have been many conversations through time with Coinbase, between the SEC and Coinbase. Can you characterize, did you ever get close? Have you ever sort of gotten close to getting them to accede to your wishes? I would assume, obviously, given the complaint, they didn't quite get there. But can you give our viewers any sense as to what's happened to get to this point?
Look, I'm not going to go into any one set of conversations between the agency and a company, but we've had discussions with literally dozens of crypto incumbents, including the ones that you just mentioned. And what we find is this is a field that's built, the whole business model is built on non-compliance with the U.S. securities laws. And we're asking them to come into compliance, and they're going a bit of catch us if you can. That's a sort of generalization. And they're commingling various functions that traditional finance we don't allow. I mean, the public would be aghast if they thought the New York Stock Exchange was also running a hedge fund trading against them, or allowing wash trading, or lacked controls to protect against fraud and manipulation on the platform. And so the conversations have been constructive, but it's also about them bringing a business model into compliance. We have had success. There was, even in the last 2 weeks, an entity filed as a crypto entity filed as what's called a special purpose broker dealer and got registered that way. We've had successes with tokens, but now it's about these crypto exchanges in the middle of the market where, frankly, the public should really be careful.
Stephen K. here.
All right. So a few things that I want to say about that. Let me stop sharing the screen for a second. Okay, so I bet the SEC said, hey, Coinbase and Binance, if you want to come into compliance, you need to drop 98% of your trading pairs. You need to stop this staking madness. Most of your business model is completely non-compliant. And Coinbase and Binance, they can't do that, right? Because if they did that, they would be out of business. They were getting rid of 99% of their revenue. So they said, oh, they didn't want to agree to that. They said, oh, but you're not regulating us properly. We need better clarity in our favor, by the way. We need more clarity in our favor of new regulations, how you're going to get us to come into compliance. We want to come into compliance. We're working with you. We're having lunch with you. You're getting access to all this stuff. We're giving you a ton of effort here. But what we are unwilling to do is actually listen to what you're telling us to do and implement those changes, because our business model is predicated on fraud, selling fraud to people. We can't come into compliance. So that's what Gary Gensler is saying right here. Okay, let's go into the next bit here. I need to share the screen again. Where are we going? Where are we going? Sorry, guys. Let me just go to this one, and then I can hop over to the screen I need. Okay, this is Armstrong tweet in response to the SEC, and I'll just read it out here. Regarding the SEC complaint against us today, we're proud to represent the industry in court to finally get some clarity around crypto rules. First off, screw you. You don't represent me. You don't represent this industry at all. You represent the industry of VC pump and dump fraud. That's what you represent. Have fun representing that little sliver of this industry. Yes, you're under the Bitcoin umbrella, unfortunately, and you use Bitcoin to get your foot in the door. And then, like, I mean, just imagine, okay, you mix the pure energy and potential of Bitcoin with the incubators culture. That's what gave rise to Coinbase. Not real, true, like entrepreneurship of starting a real, true business, but just simply the rotation of getting seed funding and building something and then selling it later, maybe doing an IPO, getting acquired by some bigger tech company. So Coinbase was the mixing of the pure potential of Bitcoin with the VC incubator, just insanity. And this is where it's come to today. But let's keep reading. Remember, the SEC reviewed our business and allowed us to become a public company in 2021. Okay, true, but they did not say that everything you did was legit. And the SEC, there's actual paperwork, obviously, in these filings where the SEC is saying, by letting you do this, we're not saying that any of your business, actions are not illegal. So this is just kind of a moot point at this stage. There is no path to come in and register. We tried repeatedly. Okay, they tried to come in and register without complying. Like if I say, in my business, no shirt, no shoes, no business. That's a common thing here in the States, where like a gas station or a grocery store or something, if you're not wearing a shirt and shoes, you can't come into the business. And this person continually tries to come in and they say, but, we're trying to comply. We want to come into your business. We're trying to come in and register and do this. Well, put on damn shirt and shoes then. Drop the scams, Coinbase. Drop the model that is out of compliance. They can't do that because it's 99% of their business model. So we don't list securities. Of course you do. You just don't want, this is a turn of phrase. You don't call it securities, but the actual Securities and Exchange Commission calls them securities. Who's going to win that? We reject the vast majority of assets we review. Well, you should have rejected more. You had 16,000 on your app, dude. 16,000. How about just try not offering 16,000 fraudulent scams so that you can get the rake and make money for your VC Ponzi pumpers? The SEC and CFTC, so this is the equities branch and the commodities branch of regulators in the US, for those that don't know, have made conflicting statements and don't even agree on what is a security and what is a commodity. All right. But that's not making you unable to comply. Okay. This is why the US Congress is introducing new legislation to fix the situation. And the rest of the world is moving to put clear rules in place to support this technology. Very unlikely. Okay, the whole world, a lot of the world is moving towards CBDCs, not towards, that's fraudulent as well. That's a scam as well, but not this type of fraud and these type of scams. Okay, that's not what's going to happen here. Instead of publishing a clear rule book, it's called the Howey test. Gensler, and also who was the previous chairman, Clayton, he was also extremely clear about this. This has been clear the whole time. The SEC has taken a regulation by enforcement approach. That is exactly what the Howey test is, bro. Come on now. So if we need to avail ourselves of the courts to get clarity, so be it. Okay, fine, but you're not doing it to represent the crypto industry. You're not doing it to represent me. You're not doing it to represent Satoshi. You're not doing it to represent any of these pure Bitcoin businesses that have no problem. There was a meme out there, or not a meme, but there, Jack, I guess, is back on Twitter tweeting. That's Jack Dorsey. And he responded to one of the Winklevi twins talking about all this enforcement and stuff. And Jack just responded with popcorn. Jack is one of the largest Bitcoin sellers in the world, right, with Cash App. But he chose not to go down the crypto scam casino route, being Bitcoin only and building a business around that and being a leader in that. Breaking hundreds, I think they brought in hundreds of millions of dollars in 2021 and 2022. I mean, they're doing great things over there at Cash App, but they decided to be Bitcoin only, and they're not in any trouble here. So yes, popcorn. Jack has it right, popcorn. All right, that's it for that. Let's jump into this one from Bruce Fenton. Am I sharing the screen? Yes, I am. Okay. Bruce Fenton, just a little background. He is longtime Bitcoiner. He started, wasn't it the Bitcoin Council? No, I can't remember the name of it, but it was supposed to be like a group of businessmen and moneyed interests that could form a Bitcoin council early on in Bitcoin, and he was kind of the president of that. So he always has had these centralization type of proclivities, even though he claims to be an anarchist, and I think he probably is, and he talks about that in this video. He did also run for at least the state legislature. I don't know if it was, I don't think it was, going to Washington from New Hampshire, being a representative in Washington, just a representative in the state legislature. But so, yeah, he has these proclivities, and maybe it's like a Ron Paul situation where he's running to just have a voice. He's not necessarily expecting to win, but at least to get those topics into the conversation. I don't think those efforts usually work too well, especially if you don't clean yourself up and you just kind of you become a laughing stock in a way. So I don't know. But let's listen to Bruce Fenton and see what he has to say about all this.
Hello, Bitcoiners. I wanted to make a quick video. It occurred to me that, there's been many cycles in Bitcoin, and we're going to mainly talk about Bitcoin here, but there's been many cycles. And
we mainly talk about Bitcoin here. Like he's trying to slip that in. Oh, my cred is good. My cred is good.
Different people come in each cycle. I was lucky enough to come in one of the earlier cycles, not the very earliest, but pretty early, 2012, 2013. And it occurred to me that there's a lot of folks in the current cycle. It surprised me how many Bitcoiners, there's a lot of newer Bitcoiners over the last few years, and they've been brought on by a good narrative. I think it's a narrative driven by folks like Michael Saylor and Safedine and Ross Stevens, Nidig, a smart narrative that makes a really good, solid case for Bitcoin. Around that community, there's a lot of people who are kind of pure Bitcoin and heavily critical of altcoins. And I get that, and I get the argument for it.
Do you really? Let's hear if you really get the argument for this. So I came in around the same time as Bruce Fenton, and pretty much that same generation of libertarians. It was kind of like in the post Ron Paul era, 2012, when a lot of people fell out of, became disillusioned with any sort of progress in the system. Gold had topped and was coming down. It hit its previous all-time high in 2011, and it started coming down, and it didn't seem like there was any hope. And so that's my generation in Bitcoin. We found Bitcoin from that kind of disillusionment of the system, and that's the same generation here as Bruce Fenton. But it's all, I don't think the narrative has changed all that much. You still hear everything about freedom in Bitcoin. You hear about the monetary arguments. The only thing that's changed really is things have gotten more precise, maybe more developed, more fleshed out of all of these reasonings. It's much less naive in a way. And I'll be the first to admit that I have learned so much in the last 10 years of being in Bitcoin and being part of the evolving maturation of the space. It probably parallels my own personal maturation into being a father and, my type of deflationary thesis that I've come to, how I understand money, how I understand all this stuff. So yeah, there's a lot of things going on here, but I don't think that it's a wholly different narrative is what I'm getting at. You still have those freedom aspects. So let's see what else Bruce Fenton has to say.
But what surprised me is that there's a lot of people who are also in favor of state action, in favor of SEC action, for example. The reason that surprised me is because the cycle that I came in and the cycle before it and the cycle after of it,
Okay, just stating that as a fact with no evidence. He doesn't even give a name. Like so-and-so that I saw on Twitter. Like such and such that said something at the Bitcoin conference on stage. Here's my evidence of these people that are cheering on the state action. And that's why I said early on in the show here today that I don't necessarily support what the SEC is doing, but I see it as the way the world is. You would be absolutely idiotic. You'd be insane to just wish away the SEC. I'm going to act as if the IRS and the SEC does not exist. You have to be a moron. Okay, you must, that would be the same as one of my favorite analogies is gravity. That would be like behaving as if gravity didn't exist. How do you even go through life like that? You wouldn't be able to survive. So, no, I don't think I have not seen anybody cheering this on. There might be a few statists in Bitcoin that at least tend towards a minarchist type of statism. But I don't see a lot of them. They are definitely not the majority. They are not even a sizable minority. They are a tiny, tiny minority. So anyway, let's keep going.
Kind of anybody who got into Bitcoin from 2010 to 2015, the ideals of liberty and freedom were really, really prominent in this space at that time.
And why is that? Well, that's because the generation that came in, like I just described, okay, they were disillusioned. They were looking for freedom. They were looking for a place where freedom actually worked, where it didn't look like it was futile to fight against the system. But it was naive. All right, let's keep going.
And I would say is the origins of it. Certainly by Satoshi's writings, Satoshi was very identified with liberty, liberty ANCAP principles. Many of us, I first found out about Bitcoin at PorcFest, which is an event here it's an anarchist festival, basically here in New Hampshire. That was like 2012, 2013. There was a lot of people talking about Bitcoin there. The roots of Bitcoin is entirely anarchist, ANCAP, and libertarian driven. It would have been very, very difficult in 2013 to find a Bitcoiner who wasn't of those opinions. It would be, a small minority, maybe 5% or something.
Correct. Bitcoin grew out of, and I'll bring this back up here. Bitcoin grew out of cryptography. It grew out of cypherpunks. It grew out of privacy. Okay. That's the roots of Bitcoin. decentralization, trusted third parties, getting rid of trusted third parties. But I don't like the way that he is trying to say that Satoshi didn't accept or understand the reality. And on Telegram, I brought up a quote by Madison, former president, founding father in the United States. And he said that if men were angels, government would not be necessary. Well, if men were angels, decentralization wouldn't be necessary. Getting rid of trusted third parties wouldn't be necessary. That's what Satoshi would say. Satoshi understood the need to get rid of trusted third parties because of the way the system works. There's a reason you need decentralization. So would Satoshi be a statist if he acknowledged the facts of the world? That trusted third parties will be corrupted? Is he a statist, Bruce Fenton? No, of course not. That you have to acknowledge the way the world is, man. All right, let's keep going.
Then, 2014, 2015, you get more venture capitalists. The industry starts growing. I remember I was at Andreessen Horowitz before, I think it was, I don't know if it was A16C yet or not, but event. And Mark Andreessen said something about, bringing in more regulators and getting more regulatory clarity. And somebody in the back, they were joking. They said, oh, if this was 6 months ago, somebody would have said, F you, There was I was called a statist shill, a suit-wearing Wall Street guy that nobody wanted. I was attacked. I was, widely considered very statist, believe it or not, by the Bitcoin community because I'm regulated and stuff like that. So anyway, it's surprising to me that there's people now who are kind of pro-SEC. And so I want to give you just a couple things to think about. One,
pro-SEC, still no examples.
One, think about and research the origins of this technology in this space and read Satoshi's writings and go back to the early days and think about it from a liberty perspective. To me, that's what this entire movement is all about. Second thing to recognize is
this movement is not about anything. It's about people following their own personal incentives. Period. Bitcoin being a beautiful new element on the periodic table that the world needs to adapt to. It's not about anything. I don't know, think about this, you have two gases, okay, in like a contained volume, and you introduce one of the gases into the other gas. And what happens? That it diffuses throughout and they get mixed, right? Is that about the freedom of the gas? Is that about anything? It's not about anything. It just is. That's how it works. And that is what Bitcoin is. Bitcoin is a new element being introduced to the world, and it's diffusing. It's not about liberty. It's not even about sound money or anything. It's just the way it is. And our job should be to try to understand how this is going to happen so that we can get ahead of it. My tagline for the podcast years ago was to keep you ahead of the curve. Ahead of the curve of this diffusion of Bitcoin into our new world. Not to tell you what it's about, but to keep you ahead of the curve. So I don't like it when people say that Bitcoin is about freedom. At the beginning, Bitcoin was about this, it was about that. It wasn't. All right, let's keep going.
These things don't work. They don't work. Sam was tight with the regulators, and he was the biggest fraudster our industry has seen. Bernie Madoff was the biggest fraudster of all time, and he was the regulator. He was the head regulator. He was the chairman of the largest regulator. We can never let them forget that. The regulations don't work. Enron was a public company, very heavily scrutinized. Theranos was a public company. Frauds happen. And that's a horrible thing. But the idea that politicians are going to stop frauds, that's just a fallacy. So we all hate frauds, and most of the comments on my Twitter feed are all like, "Hey, frauds are terrible. People lose money." Yeah, I get it. I believe me, I get it. Probably more than most. I was a financial planner and financial advisor for many years, and I've seen firsthand people who have lost money. I've seen people lose money in scams. I mean, one of the worst calls I would get is somebody in kind of denial, and they'd say, "Oh, my aunt has 280 grand and she thinks the investment isn't good, trying to figure out what she can do. Can you do a no portfolio?" I always want to look at the statements first, because sometimes the money's gone. People think they have 280 grand. It's like, no, you paid 280 grand for shares in a limited partnership of a thing that didn't work. So believe me, I get it with scams. They're horrible. But it's a fallacy to think that politicians can solve them. Politicians can't do anything. You wouldn't.
Okay, so all of this whole rant here is about how politicians can't solve anything. Not about saying how these things aren't fraudulent. Okay. He hasn't claimed that all of these 16,000 tokens that Coinbase was fraudulently educating you on and selling you, that these aren't fraudulent. Okay, I get it. I will even cede the point that regulators can't do consumer protection. Fraud will always exist. Of course, that's the case. Of course. But why should I care? We talked about this a long time ago. Well, not a long time ago. It's just a few months ago when the Wells notices went out and stuff to Coinbase. And everybody was against the SEC and trying to back Coinbase. Not everybody, let me restate that. A few prominent Bitcoiners like Giacomo Zucco was saying that they would defend Coinbase or Ethereum against the SEC. And my response was, you're picking fraud over force. Both of those things are wrong, right? At least according to Giacomo Zucco, he would say that force and fraud is wrong. Well, you're protecting the fraudsters against the people doing force. Why not do what Jack Dorsey does and just get some popcorn? There's a big difference between chewing popcorn or eating popcorn, whatever, and cheering on the SEC. So Bruce Fenton's rant here does not defend the fraudsters. He won't even mention that. But let's keep going.
Wouldn't trust a politician to feed your dog. The DMV is not efficient. Government isn't the answer. Politicians aren't the answer. Politicians are dumb. They're not the answer. They're not the answer. And that leads me to the third point, important point, which is kind of what I might call, libertarianism 101. Or, freedom and liberty movement 101. And that's a real basic thing. But if you didn't come from this movement and you weren't here early, and you don't have a lot of folks in the new iteration are really high quality Wall Street folks. A lot of people who, credentialed people with serious background, serious money. Look how beautiful this is. Isn't this great? But there's a lot of serious folks that have come into the space in the last few years, but those are the ones that I'm hearing a lot of. Some of them are like Republican voters, but they generally don't consider themselves pro-regulation. But this take on the SEC to be cheering for government because they're cracking down on coins you don't like, or policies, or because Coinbase sells coins you don't like. It's a bad status take. So first of all, recognize that the industry. This is our origins. This is what our industry is all about. This has always been a political movement. Second, recognize.
Red flag. This has always been a political movement. No, it hasn't been about that. Okay, you have been about that. And perhaps people that you know have been about that. But that's not what Bitcoin has been about. Bitcoin is a periodic element, and it's not about anything. But let's listen to Libertarian 101.
These things don't work. They don't work. If it was a choice of, hey, this is really sucky and it hurts our industry and it costs a lot of jobs and it's a big pain and it's expensive, but at least it stops all the fraud. Well, then of course we would all be for that, but it doesn't stop the fraud. In fact, it makes it easier for fraudsters because the honest companies are burdened by creating 50-page prospectuses and
Okay, so in this particular case, you're going to tell me that it's not going to stop the fraud at Coinbase and it's not going to stop the fraud at Binance?
fraudsters just make up the prospectus. They'll lie. They'll say that they did, Bernie Madoff did. Everything's fake. So all the regulations in the world aren't going to stop the truly bad fraudsters. And there's always been fraud. There's been fraud in the public markets forever. Enron, Theranos, there's been a million of them. And there always will be. And that's part of a natural economy. My opinion is that if you let the economy work, you're going to have more of this. You're gonna have more fraud, but you're also gonna have more opportunity. And the markets work. Have some faith in the markets. Politicians don't work. We know this, but markets do. What killed the ICO wave of 2016 and 17 wasn't regulatory action. It was the markets. People realized those were stupid terms and bad investments. So let markets work. But then the third point, the most important one, recognize that the state is violence. Okay, it is violent. It is violent. That's the nature of the state. That's what differentiates the state from every other type of organization. Its ability to do violence to you, its ability to put you in a cage, its ability to shoot you, its ability to use a force, its ability to say things that are not a suggestion, but are backed by men with guns. That's the ultimate power of Gary Gensler, because he has the ability to inform the Department of Justice and work with law enforcement, and he can have, essentially, have people involved in legal actions. That's what the state is all about. And it's also why people can't just say, "Who cares what you think? I'm not going to answer your paperwork." No, you have to, because eventually men with guns will come if you don't. If one of these companies just ignores these queries, for example, or continues the actions that the SEC alleges are bad actions and just ignores it, they're going to be in big trouble. Men with guns will come to them. So you have to recognize that. The state is force. It's not a suggestion. It is force and it is violence. And then you must ask yourself, as a moral person, when is it okay to do violence to someone else? And when is it okay to advocate violence being done in your name with your tax dollars by, quote unquote, your government who serves you? When is it okay for them to do violence to somebody? This is a question you could ask. If you have kids, ask your kids, especially if they're young. It's the kind of thing you ask to a 4-year-old, 5-year-old. When's it okay to hit somebody? Is when they hit you, okay? That's when it's okay to do violence. When they're immediate threat to you, to your life, liberty, property, when they have threatened your life or liberty or your property, you are morally justified in using equivalent force to enact justice or prevent them from harming you. You're not able to shoot somebody for taking your bicycle. That's not a reasonable use of force. You're allowed to go after them and, in my opinion, pull that bicycle away. And if you got to hit them in the head, I think that might be reasonable. It depends.
Okay, just thinking about this when he's talking, I have a longer response at the end of this, but like my kids will stick their finger right in someone else's face and not touch them. They're not actually touching them, but then the other kid slaps their hand away or pushes them. Like, what's the appropriate use of force? Every time you say something like this, or people say something like this, which I am generally for the golden rule. I'm generally for freedom and the max extent of rights possible, but there's a gray area. What is the appropriate response? What is the equivalent use of force in the backside on the reverse side? So anyway, I will continue this and then respond a little bit longer here.
On the circumstances, but the basic point is violence is only justified when there is a victim who has had their life, liberty, or property violated. That isn't the case with these coins. I know you don't like the coins in many cases, but it's not a moral or justified use of force. It's not a justified use of our tax dollars. It's not a justified use of the government. It doesn't work. It's not effective. It's violent. And it's not what our industry is all about. Support peace.
Okay. So what I will add here to this, sorry, I'm going to stop sharing the screen. So what I'll add to this is, yes, politicians and governments, they're inefficient and all that. I totally agree 100% with what Bruce Fenton is saying. However, I believe that governments are actually, and the politicians and governments are actually part of the market. You can't get rid of the government. Maybe in years down the road, like we're talking eons, maybe thousands of years down the road, we'll advance to a point where we won't need, or we won't have a government. But they are part of reality, and hence they're part of the market. And so people will make business decisions, people will invest, people will do these things depending on the government. And yes, when there is more government intervention, that it decreases the efficiency. People understand that now. We've lived through the great Cold War debate. I guess there's always radical leftists that are communists that want to continue with centralized control, but that is all part of the same game. I remember a comment from, now I'm going to forget her name. I think her YouTube channel was called Brave the World. She was a Bitcoiner. I can't remember her name off the top of my head right now. But she had this thing talking about in the Soviet Union, they could not stamp out the market 100%. It was always there under the surface. Little note passing rings, a tiny black market that you could find some necessities and things. You couldn't, no matter what, they could not stamp out the market 100%. And it might be the opposite way is also true. You can't stamp out the government 100%. It is part of the market. Now, yes, it's true that government has a monopoly, supposed to have a monopoly on violence, except for self-defense, right? We can defend ourselves, like Bruce Fenton was saying there. However, without government, that doesn't mean there will be an absence of violence. That is one of the anarchist problems, which I kind of consider myself a crypto anarchist, but that's a big problem for anarchists, is that the source of violence, the only source of violence is not the state. Even with the state, the only source of violence is not the state. If you got rid of the state, there would be a lot more, it would be a lot more, I think, a lot more personal violence, because we've seen that in places where, you have a breakdown in society and things. And yes, it's nice to say that there will be people, we just need to have good people and have an anarchist society, and everyone will be peaceful and love each other. But I guarantee you that's not what's going to happen. Human nature will take over. And okay, what else do I have to say? Equivalent. Yeah. And then it gets back to, if self-defense, what is justified, what's an equivalent. I saw Bull Bitcoin guy, Francis Pouliot, on Twitter saying that in a normal system, without the SEC and without government, these people would be drug out on the street, tar and feathered. But we can't do that. What happened? What's the appropriate response, the equivalent level of fraud or force to somebody losing their life savings on a fraud that was perpetrated by VC capitalists in San Francisco through Coinbase? What's the appropriate level of retribution? So there's too many gray areas to cover here, but it's not cut and dry. And saying that you told them so, which is what Bitcoiners are doing, and getting popcorn out, is not cheering on the SEC. It's realizing the intricacies and the nuances of what's going on here and saying, damn, that's why we have decentralized Bitcoin. That's why we warned you for years and years, because you're getting into this gray area. You're getting into this, you're realizing that you can't escape gravity, that it will eventually get to you. So anyway, that's all I have for that part. Let's go on. Let's see, do I have anything else? Yes, let me share my screen here. Sorry, this is turning into a long live stream. I guess not sorry. Sorry, not sorry. Where am I going here? I'm going to have to go. There we go. There it is. So, yes, Samson Mao he sums it up great. I mean, I think we're on the exact same wavelength here. He says, I didn't see any Bitcoiners cheering for the SEC. And just like Bruce Fenton, say a name. Don't just make a blanket statement. That's how you know that they're not acting in good faith, when they just use blanket statements like that. And I tried to, even when I was going through that Bruce Fenton talk right there and I was trying to respond, I ended up using Giacomo Zucco's name because I wanted to give an actual example. But they won't give an actual example. They'll just say Bitcoiners are cheering on the SEC. Anyway, Samson Mao says, I saw a lot of Bitcoiners saying, get your coins off exchanges. Crypto projects are securities, and Coinbase lol. Agreed. We warned them for a very long time. Let's go to this one. Again, Samson Mao. Shitcoin VCs will write an essay on Twitter about Bitcoin culture and why shitcoin casinos are important, but ignore the question of why crypto projects should even exist. And again, I'll go back to the Bruce Fenton thing. He disses on government, but does not diss on the fraudsters. Okay, I can go with you on the government thing, but I can't go with you on supporting fraud. And that is, they just won't even go there. They won't talk about why their project is good or needed or relevant or innovative. It's not innovative at all. Okay, what else do we have here? Last one, Adam Cochran. AdamCochran.eth. So that tells you something. But let's see. This one is pretty interesting. Just dropped, let's see, at around noon today. So 3 hours ago. And I'll read through this here for eventual podcast listeners. Evidence from SEC case against Binance includes internal chat logs. First, between Sam Lin, former compliance lead at Binance, and Alvin, previous head of business development. First is their convo about equity bonuses, where Sam talks about risks of holding BNB. And so Sam says, BNB sucka any day can go to zero. We are operating as an effing unlicensed security exchange in the USA, bro. This is from internal chats. It does not look good. Specifically tells Alvin to take his BNB bonus and dump it into UST, as it will be dumb to hold. Okay. Talks about how the compliance side is a sinking ship like the Titanic. You're not alone on this sinking ship now if it sinks. I can't read all this, but he says it's like the Titanic. So these are internal chat logs again, back from 2018. This has been going on for a long time. Sam notes he feels the risk reward isn't balanced and that he wouldn't feel comfortable signing off on the OFAC compliance stuff if he was CCO, during a convo of trying to get an American lawyer to come on as CCO. All right, there's the chat logs. Sam mentions how Wei Zhao, CFO, asked him to take the CCO spot and do the sign off for double pay, and he wouldn't do it. It's too risky. He knows the stuff that they're running here. Okay, most interesting, when talking about it, he mentions that Wei and CZ, quote, know exactly what the hell happened in regards to why people don't want to sign off on the OFAC reporting. So there's some deep trouble going on, some deep fundamental problems with Binance. Sam Lin, the then head of compliance, goes on to say, there's no effing way we are clean. I have seen nothing to prove we are. That is Binance head of compliance, the highest ranked compliance person at the company at the time, saying that they aren't clean. They talk about how CS is teaching people how to circumvent procedures, I guess CZ probably, and how business priorities supersede any compliance training, and that BNB strategy is, quote, to survive for 2 years and then F off. Continuing, the SEC also presents a translated recording of CZ specifically noting the 2019 blocking of U.S. users and how they should approach slowly getting U.S. users to use foreign KYC and ignore the IP addresses and slow the roll out of the news. Oh my God, that's so damning. That's so damning. Continuing on, as well as internal convos during the launch of Binance US, in which Binance execs were talking about leaving a door open for US users via purchased KYC and VPNs. Oh, brother. Next doc is a pretty damning one. In a convo, Sam Lin tells someone that an entity can be onboarded through the US exchange, but via .com with a special setup. And that, quote, CZ will definitely agree to this, LOL. Oh my gosh. Goes on to say, quote, we always have a way for whales. That's the nature of our biz. The SEC has also filed detailed request items outlining issues with funds, such as the fact many Binance US withdrawals came from Binance International. So they're commingling funds. And this is direct evidence of that. Just like FTX was commingling funds between Alameda and FTX, that's the type of stuff they're doing. And like Gensler said, imagine if the international, ICE? Oh gosh, what's ICE stand for? The big stock exchange company. If they were doing that, it would be not legit. No one would think that was fair. Internal convos with Cooley, where Binance International staff convert USD to Binance USD and can't chase down why. Okay. That's just the start. There are roughly 80 other documents I have to buy later on Pacer and go through, especially in the section covering the misuse of funds and banking discrepancies. So tons and tons of new evidence is coming out about this Binance stuff. It looks like Binance could be through. Crazy. I honestly did not see this coming. I thought Binance had weathered the storm of 2022 and they were going to be okay, but apparently they are not. And Coinbase is in a very similar situation. Let's check the price right before we head out here. Again, price is still sitting at $26,477 now. Oh, updating. Yep, $77. So so far, no reaction from the Bitcoin price. I'm not even going to check the other coins, but all right. That's going to do it, guys. Thank you for joining me. Ansel Lindner, Bitcoin and Markets. I do these live streams, YouTube, Twitter, Twitch, Rumble, and now, of course, on Telegram, which is my home base. Check out t.me/Bitcoin and Markets. Check out bitcoinandmarkets.com to support my work, get early access to written articles, get the downloadables that I showed, clickable timelines of Bitcoin's prehistory as a downloadable, and also take part in the forecast competition that we have every month. All right, guys. See you on the next one. Bye.